With the quorum present, I'd like to call this meeting of the Co-op Budget Committee to order at 6:32 p.m. This is a regular meeting for the Co-op Budget Committee for the month of September. The agenda was posted more than 24 hours in advance of the meeting as required. This is our first in-person meeting in a while, so I'm happy to welcome everybody here this evening, and I'd like to introduce everyone who's with us. We have Cindy Van Conant, who's our school board representative on the Budget Committee, Dave Blinn, Matt McGuire, Lauren Ridstrom, Raul Blanchet, Brian Rader. I'm Darlene Mann, and joining us this evening is Kelly Seeley, our business administrator, and Tim Green from Robertson Green, our audit firm for the district. If you could please join me for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay. I did send out some correspondence today mentioning a couple of they really aren't agenda adjustments, just additional topics to be covered under the categories that we already have in the agenda. So we'll address those items as we work through the agenda this evening, but I'll ask if anyone has any new concepts, ideas, anything they'd like to bring forward on the agenda. Okay, seeing none, I'll move forward to the appointment of a meeting observer, which for September is Lauren. And go on to the approval of minutes. We have, I sent out a revised set of minutes based on Raul's track changes from the August 20, never can remember the date. 27th, yes, from the August 27th meeting. So I'll take a motion to accept the minutes as amended.
So moved.
From Cindy, seconded by Brian.
I wasn't here.
Any additional comments, changes, questions, discussion? Okay, seeing none, all those in favor of the amended minutes, please indicate. 1, 2, 3, 4, 5, 6. Oppose, abstain. Dave's abstaining. Okay, so it's 601. Seeing no public this evening, we will head straight into our general business section of the meeting, and we're starting with our audit overview. Typically, this is something we do in August, and given kind of the circumstances, it would have been difficult to accomplish half by Zoom and half in person. So I really do appreciate, Tim, you coming and joining us again this evening to give us an overview and answer any questions that we have with regard to the FY19 audit. So that's not the audit that was just completed this summer. It's the one for the prior year. So at this point, Tim, if you can give us just some highlights, and then we can open up the discussion.
Happy to do that. So again, yes, I'm here for the June 30th, 2019 audit review. And the report ultimately was issued back in May of this year. That's a late time frame, but we certainly target more. But with 4 districts, your staff has to prepare management discussion and analysis reports for each one, and they have to deal with DOE 25 timeline before that. So we're always striving to. We come in August every year, and that's a good time frame for us. And the district does a fantastic job getting stuff ready for us in August. That's one of my earliest jobs. So, and they do a good enough job that we're able to basically now we're at like 6 days. It takes us to be there, and then additional time after that. But
right,
that's pretty good.
But for all the districts that you're doing, that really is time.
For that early, it's definitely impressive. So once again, as I've said in the past, you're hiring us for that first 2-page report. It's our audit opinion, and it was a clean opinion for the school district again. The only thing of note in that first letter is that there was a change in accounting principle that the district implemented, which basically was changing your reporting of your student activity funds from an agency to a special revenue fund. And that was because of a change in accounting standards, essentially. They are just basically saying that they decide the GASB Accounting Standards Board kind of developed their review and said that student activities meet more they're not quite as custodial as they may seem to be. There is some administrative choices that are made by the district that kind of takes them out of the realm of true custodian type funds into more of a hands-on fund, if you will. So reporting that special revenue doesn't really change. It changes your quantitative figures when it determines what becomes a major fund and so forth in your reporting package, but it doesn't, it's not a fund that is budgeted by RSA, so it doesn't change perhaps some of what you deal with that.
Does it change any of the internal tracking requirements, like system-wise, what needs to be maintained? Or?
No, it hasn't. I do tend to sometimes discuss with Kelly and her staff. It could be brought into I know your accounting software has a module that could handle it.
Right.
I haven't necessarily seen it used to 100% success in other districts that have tried to implement that. It's when you're dealing with activity that's kind of handled at schools for the most part, having those off-site employees have to deal with the software to make all their transactions, to make everything happen. Sometimes it doesn't work the way that schools like it in general, across the board. I'm not even saying this district specifically, but.
Right, so since it's not, I wasn't aware that it wasn't part of our accounting software, so it's managed independently.
Yeah, they use QuickBooks in each school. And one of the reasons one of the things we're trying to do to minimize what they do is bring as many of the accounts over to the SAU as we can, so that what's left at the schools are true clubs and not anything else. So that's what we are trying to minimize what they do.
And I always, I know Fund 23 is part of student activities, and it's another account that's kind of managed on the side, and I guess I always just
Well, Fund 23 we do manage.
Right, but I think I always just struggle a little bit with the use of it, because I know that some of the items in there were targeted donations or things for very specific items that maybe no longer exist, or programs we don't implement anymore, and it just becomes, and it's not, those amounts aren't necessarily significant, but it's just, I don't know how we figure out a way to dedicate or utilize those funds.
Well, we're trying.
Yeah. No, I know. And so I know some of them were, previous sports, and I think I'm just thinking of one or two specific ones, like there was like a dairy donation or, something like that was, gosh, can't we use that for a smoothie machine or something like that, to just be able to utilize those funds. Sorry.
So, yeah, so that was the only highlight of the opinion letter, other than it being a clean opinion again. The management discussion and analysis report, like I mentioned earlier, is something I review, but we're not giving an opinion on that, and we do put a sentence in our report saying that we've looked at it, but we're not giving an opinion on it. But it's comes from the same data that we have audited, so there's certainly a level of confidence in that report. Your first two exhibits, statement of net position and statement of activities, that's your full accrual basis. So this is your government-wide, and it's showing your assets on the books, and it's showing your liabilities and on the books as well that don't show up in your general fund for the annual operating activity. Just the total net position for the year ended June 30th, 2019 was just under $2 million, and on Exhibit 2 you can see that was a decrease of about $270,000 from the year before. I do jump around a little bit, and I probably go pretty fast too, but if anyone has any questions, just stop me. You can see on Exhibit 6, you can see how the $270,000 decrease, what that comes from. On your GAAP basis, which I'm going to get into in a minute, you actually had an increase in total fund balance for the district of $1.7 million. When you include depreciation, there was an issuance of bonds in the co-op in fiscal year 19. That's a revenue in the general fund that is not a revenue on the full accrual basis. That's just a new liability. So that was so obviously $1.6 million, that would decrease your change in fund balance. And then basically the cost of benefits provided through the pension system was another factor that decreased that. So that was your change from having $1.7 million increase in fund balance on one basis to a decrease of $270,000. So in Exhibit 3, your balance sheet on your governmental funds, you can see that the general fund ended the year with a total fund balance of $1,281,000. Of that, it's broken down into 4 categories, 4 or 5 possible categories. You have non-spendable, and that represents the prepaid items, the prepaid asset that you have. You've spent that cash, but it's for the next year expenses, so you haven't reduced your fund balance yet, but you don't want to leave it in unassigned fund balance because once July 1st hits, you've already lost that your fund balance. You had no restricted funds in the general fund. You had committed funds of $571,000. Committed funds represent expendable trust funds, but on two events. One is the subsequent to that fiscal year meeting, so basically your March 19 meeting. So you're voting for fiscal year 20. If you use surplus to go out of, if you use surplus available on July 1st, that gets committed immediately on your fiscal year 19 statement. As well, the actual balance in those trust funds is reported within the general fund, just for reporting purposes. It's added to your receivable and then committed on fund balance, so it's not part of your unassigned. It doesn't get mixed into tax money. Your assigned fund balance of $55,000 represents open POs, and then you're left with your unassigned balance of $630,000. Exhibit 5 is your income statement. Statement of revenues, expenditures, changes in fund balance, similar to an income statement. Total revenues for the general fund was $21,500,000. Total expenditures, $21,478,000. So you had an excess of revenues over expenditures of just under $20,000. You also had a transfer in of about $6,000. So your net change in fund balance for the general fund was an increase of $25,000. You can see there's a new fund here, capital project. That was basically to track the debt issue. The bond proceeds that took, the project went over a couple of years, and it's certainly much easier to track and highly recommended to keep separate funds for a capital project when it most likely would take more than a year to do. Other than that, your other major funds are your grants fund, which never has a fund balance because grants are a matching concept. If you spend money that's going to be reimbursed by a grant, you have a revenue regardless of if you received it or not. So you always should be running a zero fund balance in that fund. And then the permanent fund is trust funds held by the town on the school district's behalf. The other exhibits in the front are your budgetary basis general fund statements, general fund exhibit, and grants fund. The only difference on the budgetary to GAAP basis represents encumbrances. When you're talking about your budget, an encumbrance essentially is an expense in your position because you're looking at what's left after encumbrances. That rolls back into fund balance, whereas on GAAP basis, an encumbrance is not an expenditure. So that's why it's moved to assignment in your fund balance, because it will be an expenditure the next year, and you don't want to lose that fund balance to support that. So on the budgetary basis, total revenues in the general fund was again $21,491,000. Slight difference between the interest on the expendable trust fund. That was the slight revenue difference. Expenditure totals for the general fund was $21,307,000. So you had an excess revenue over expenditures of $184,000. Then there were transfers out, a net transfer out of $150,000. So that resulted in a net change in your fund balance in the general fund on your budgetary basis of $34,000 increase. You also had a decrease in non-spendable fund balance, so that $500 rolls into unassigned fund balance. And you did have an increase in that committed fund balance, representing the votes from surplus for fiscal year 20 of $9,000. So you can see altogether, that's how you start the year at $604,000 and end the year at $630,000. Those are the main reports to talk about. The notes to financial statement kind of speak for themselves. They provide a bigger breakdown and more detailed breakdown of significant balances, and are the responsibility ultimately of the district are the notes, and the district really should be adding information if you ever felt when you were reading these notes to financial statements that there's something that's not clear to you as a reader. That's something that the district can change too. Like we can discuss whether or not, there's certain requirements of what can go in there, what can't go in there, but there's also opportunity too for the district to review this, and I mean, the business office does certainly review this before it becomes final. But sometimes districts and clients don't really realize how much say they do necessarily have in how it's presented, or what's presented specifically. So if there were ever major items in here that you as a board or the business office or the school board had questions on or felt wasn't representing the district accurately, that's certainly a discussion could be had. So
I have a
I just
question.
want to put that out there.
Is there an opportunity for the co-op, for this body to review the drafts prior to becoming final? Or is that something that we don't get involved with?
We don't really get involved
Or
in
should
that.
we?
I don't really think we need to.
Okay.
Because it's a review, in my opinion, it's a review of the business, the daily processes of the business office and, where the records stand. So I don't know that we have enough insight into daily practice to be able to really provide, insightful commentary. It's just my opinion.
Yeah, I'd agree with that.
The other exhibits in the back, as you probably know, they are just a breakdown. They provide more detail. You have a combining balance sheet of non-major funds. The term non-major means it doesn't meet significance dollar-wise in the district as a whole to be a major fund. But the district has always liked to provide this report that still breaks it down so it's still clear what's going on there. And then you also have more detailed general fund schedules as well. You have a detailed revenue report so you can see where your positive and negative variances by function show up. On the revenue side, if you were to look at Exhibit 15, you could see that all your other local sources, you're conservatively estimating those revenues to come in, and you're receiving more than is estimated. On the flip side, Medicaid in fiscal year 19 was estimated to be much more than actually came in. So on Exhibit 15, you can see the net positive variance in revenues was $107,000 added to the bottom line. On Exhibit 16, it's your expenditure report, schedule of appropriations and expenditures and encumbrances. That, your appropriations, you ultimately had a positive variance as well, $650,000, resulting from, and you can see the various underspent lines. This report is a nice clear picture to show how encumbrances work, so you can see the beginning encumbrance balance is added to your appropriations on theory, reduced by expenditures, and reduced by current encumbrances, and that's what your actual positive or negative variance, that's how that's calculated. And then Exhibit 17, just a real clear picture of the change in that unassigned fund balance for the year. Started the year $604,000, used $260,000 for appropriations, and then I used the $462,000 for reducing the tax rate. As I mentioned, you had $107,000 revenue surplus, and you had an unexpended balance of appropriations of another $650,000. So you had a budget surplus of right around $750,000. The two minor changes to fund balance classifications resulted in your unassigned fund balance of $630,000. We put in the student activity schedules. As far as I'm aware, and I haven't really brought this up with Kelly, but I probably would recommend continuing with that as long as you want, even despite being, now they show up on that special revenue balance sheet, but you are still providing more detail, so it's something up to the district to decide if they want to continue. And we had no comments that we put in our management letter this year as well, so it's a pretty straightforward audit.
Great. Do you mind stepping back to the
Yes.
OPEB liability
Sure.
pension section? Let me get back to that section. Busy flipping through. I think it was,
Exhibit 11?
too far back. Sorry, I was just there and now I lost it.
Are we looking for the notes or the balance?
Well, I believe it's around Exhibit 9. Just get there.
Right, yeah, 10 and 11, or, excuse me, 11 and 12 are OPEB.
Okay, so I first regarding the the net pension liability.
Mhm.
What is accounting for the increase in the percentage? Because it seems like what's driving the proportionate share is that our percentage went up.
So they are calculating that based off of your contributions every year. They're taking every single member community, adding it up and allocating by proportion.
That's just how it's
Yep.
straightforward, and
Yeah.
this year we ended up slightly higher.
But I probably misread it, but it looked like our pension liability went up at year end.
It did.
So could you walk me through how that happens?
Well, that's comes from the state's actuary.
Right.
Their calculation, so it's almost over my head. It's they're calculating your 30-year cost, amortizing that.
Oh, yes, I understand that, but if we're contributing that amount, how does our liability go up?
Because it's a pool. So if you're contributing based off those rates that they've determined they need to kind of catch up,
Right.
determined a few years ago.
Right.
But they're taking that total pool contributions, determining that total net liability,
Yep.
and then if you happen to contribute 0.25% more of the total that they've collected, your liability all of a sudden is going to go up by more. It almost had nothing. It doesn't really relate to their liability. If it goes up and down, depends on their results that year and their investments and so on. Your liability goes up or down depending on the total pool, I guess, if you want to try and look at it that way. If you're contributing more in 1 year, that means you're going to have a higher percentage of the liability.
But we must get told by the state what our liability is in any year.
Yeah.
So if we fund that,
You would never, if you were to, any contribution you make gets split amongst everything. So you put in an extra $1 million, they still have whatever their total $1 billion liability is. They're going to take that $1 million and give it to each district to reduce everyone's share of the liability. See what I'm saying? They wouldn't just look at your.
unfortunately, I do now,
Yeah. They wouldn't just,
Okay.
you don't have a set figure that every year you're trying to
Okay.
reduce. It's just going to change based on the total system liability.
Okay, thank you very
Yeah.
much for that explanation. I never knew that.
We tend to get hung up in this area every year. It's like we don't want to believe what keeps, like the numbers
Yeah,
that just keep
yeah.
appearing on the paper, so.
Right.
We'll have a discussion about NHRS a little bit later, but.
Yeah, but thank you, that's, clarifies it.
Does anyone else have any?
I'm kind of wondering whether or not we should have the state come back and give us another presentation like they did a few years ago.
I did inquire about that, so it was a great overview. We had invited state representative, I don't know if it was LGC or it was Barbara Reed, and I don't remember who she worked for at the time. And we invited selectmen, school board members, budget committee members, finance committee members to kind of have an overview of NHRS, and that's where they kind of discussed I always equate to the 30-year mortgage that is NHRS, and that's really what's determining our rate structure going forward. So a couple of years ago, I did inquire to have her come back, and they now charge to do that very same presentation. So she came and did it for free for anyone who wanted to come, but now it was like about $800 a couple of years ago for them to come and do that same
Well, given what we're
presentation.
spending, maybe it's not a bad
There's
investment.
no budget of the co-op budget. We have no budget here at the budget committee. So,
We're gonna talk about that too for secretary though, right?
yes. So, but I do, there is so much value in just getting an understanding of that as new members, for existing members as well as a reminder and refresher, but for new members also to just understand something that has such a significant impact. So it's something
Right.
I can look into or maybe just see if there's someone else who has a, a really good understanding of it, or even if NHRS has some kind of webinar or something that we could participate in, but I can look into that.
And if there is no easy mechanism to make it happen, maybe we should institute one.
Sure.
For that and other types of things that
Yeah,
are similar.
yeah. Mhm. Anything else, Tim?
No, I think maybe you were thinking too of, there was a change in your beginning balance related to OPEB. What happened was the NHRS did determine the liability for the medical subsidy portion of the pension system.
Mhm.
So now they had two, that's the OPEB. That was separate from the pension always, that's the extra, it depends on the category you're in, but there's an extra percentage there contributed. So that was brought onto the district's books in fiscal year 19 as well, and that was the $1.8 million liability that was added, increased OPEB. You always had an OPEB liability, and that OPEB liability represented your implicit rate. Another point, that is the fact that you provide health insurance to, let me rephrase, the fact that anyone who retires has access to your health insurance plan, even though you're not paying for them, they get a blended rate. They get a rate that young people are in the system and so forth. So as you work for the district, you're actually earning the benefit of buying health insurance in the future at that blended rate, which would be less than if you bought it off yourself. So that's a liability that an actuary is hired by the district to calculate, and that's your implicit rate. The medical subsidy is a defined benefit because you know what you get from that system when you were to retire in that system for your medical subsidy.
Mhm.
So that's calculated separately by the state's actuaries. And just like the pension, they say, here's the total liability for that subsidy, here's how much the district contributed, that percentage is what, it's actually going to be the same percentage as the pension, so.
Okay, yeah, because we're going to talk about NHRS, and I'll hand this out, but there are two components to that rate as an employer that we pay, and that is the pension and that medical subsidy piece.
Right.
So you're saying that because of that medical subsidy piece, and as you said, our retirees benefit from the rate structure we have in place because we offer those benefits.
Right, one of the worksheets that we request before we show up for the audit is a breakdown of those monthly contributions by pension and medical, so that we can audit the contributions on your end and apply that to the expenses that you are booking as a district on the full accrual basis.
Okay.
So what's your bottom line assessment of how the district is doing? We got an A+?
Yes. Yes, I even looked up, I got here early and I was looking through the trial balance I had sent to Kelly and Linda. I had a couple adjustments, but not one adjustment for fiscal year 19 actually affected the bottom line, which was very impressive. So I think that's a very good thing.
Excellent.
I have plenty of districts where I do provide a long list of proposed corrections.
I'd hate to be on the receiving end of that.
So you don't see any need for us to go into an executive session with you?
Great. Well, thank you so much for taking the time to walk us through that. We sincerely appreciate it every year. While we don't always have a ton of questions, part of it is due to the length of time you've been coming and doing the audit for the district, which has been great. But we have a level of comfort with the information that we have. So we do appreciate you though taking the time to come and walk us through.
Thank you. Thank you.
Thanks very much.
Thank you, Kelly.
You're welcome.
Right.
Thank you.
Thank you.
That's an A+.
Take it.
So next we have a financial update. I had identified the MS 25 and the FY 20 year end in anticipation of any updates Kelly might have had from the great news she shared with us at the end of August, that the unreserved fund balance was in the $900,000 range due to several things, most specifically because of underruns due to the closure in the spring. But we'll continue to wait as you finalize the MS-25,
Right.
which we would see by October, because it needs
we
to.
are running behind right now, so.
Well, there's a lot going on, so. But Kelly did share with me, we had asked for an update on the turf field construction and some of the legal fees associated with the field, and Kelly has some information she can share with us on that. So our teams are playing, correct? Maybe that's part of the school board update. Will the field be in use this fall?
Mm-hmm.
Excellent.
It's already been in use for practices, for
Oh,
sure.
great.
So.
Oh, that's right, over the summer.
Mm-hmm.
There was a conditioning program that
Right.
was being run, right?
So the two sheets that you have there, first of all, is the turf field cost. That's the smaller one of the two. You guys had asked to get sort of a breakdown of all of the costs that were associated with the field costs besides the actual bond payment. So I just refreshed an earlier spreadsheet that I had provided to give you the annual meeting costs associated with the turf field. There was the lawsuit, those costs, and then the right-of-way cost, the actual cost to the owner was $24,000. Legal fees associated with the negotiation of that, and during construction there were a couple of issues that came up, so that represents the legal fees associated with right-of-way, and then we had a small amount of legal fees to the attorneys looked at the contract for the vendor, so that was a total of $77,000. What I didn't bring in the meant to was the savings that Darlene had calculated last time by.
I was looking for that spreadsheet.
Yeah, it was $95,000.
Right, it was in the 90 range,
Yeah,
right?
so it was 95. So, when all is said and done, I guess you could say we saved $25,000 by doing the refinancing.
And so I just field, when we, that was the bond hearing. I can't recall, I know in that first year, we obviously delayed, we did the refinance to get a better rate because we delayed the financing the first year for these issues that you broke down. And I just can't remember even what that first year interest payment cost. We had to specifically stipulate that as part of the warrant.
You mean in the warrant article?
In the warrant article itself.
It was like 26,000,
It was lower than that. Okay, I was just wondering how that, because we had to allocate that as part of it, how that offset some of
That just
these
ended up
expenses,
falling to
but-
the bottom line because it
Or covering some of these,
or that,
like
you could look
legal
at it exactly
expenses
that
and
way
things
as
like
well,
that.
yeah.
So,
Okay.
I was hoping it was a little bit higher, but,
Yeah.
but, okay.
And
Great,
then,
thank you for that.
oh, sure. And then the second spreadsheet is where things stand right now. We haven't signed off on the field yet. They just finished a couple of the outstanding things that were left for the summer that they couldn't do in the winter. And so those we have yet to be, vetted by the project manager, I guess. And then we also have an additional cost on here from Eversource for the electrical installation. That has fluctuated greatly in terms of what they estimated the cost would be, but I'm pretty sure that this is the cost that we'll land on as they complete that installation. So that's where things stand right now.
Okay.
Remind me again, what is the acronym ROW? What's that?
It's
Right away.
Right
Oh,
away.
right away. Okay. I know it as rest of the world.
I like that. And then one thing I don't have on here, which I can get for you when all is said and done, is the donated items, which are the bleachers and the lights, and then what those costs actually come in the final costs on those. I can get
That
that
would be
for
great.
you. I don't think I have final costs yet, but when I do, I can bring that in.
And that's all donated anyway, right?
What is all
That-
done?
The lights and the
Yeah, the
bleachers and no cost to the
donations, I
district.
believe, cover the entire amount. I know that the amount of the cost of the lights did increase, but I believe the donation will cover that as well.
Right.
Any other questions?
No, thank you.
Okay, great. Cindy, is there a school board item, a school board update from September?
Not really. I wasn't
Looks
there.
like a successful
I wasn't
opening.
there, so it was, yes, a successful opening. I sent a brief summary for every meeting that we had had up until September because I wasn't going to be there. And Andy, I think I don't know if he passed it out or not, but mainly the thing he talked to him was the increase in the retirement and the percentage. That of course took a lot of information. And maintenance trust, he also, but you had sent out the meeting minutes to everyone. Those were the two things that he talked about really on the budget side.
Okay. Okay, we'll get into budget planning in 1 second. I just want to mention that I did share with everyone the draft of the SAU budget, which has, that subcommittee has its first meeting tomorrow. So I have zero details on, you know that the SAU budget is primarily headcount costs for the staff at the SAU office. So it doesn't seem like there is new headcount in there. We have the facilities person who started this year that obviously continues into next year. But I would just ask that you take a look at that. If you have any questions, please forward them on so that I'll have them as we'll have a second meeting, and I'll get some additional information tomorrow about the drivers and kind of just where the whole budget stands. But that one is at least 2 meetings and goes to the governing board. I'm looking at Kelly like sometime in December.
December is
Yeah.
when it goes to the governing board, yeah.
Right.
And
So-
that's actually also the public hearing.
Right.
I have a question.
There's-
Maybe this is off the topic a little bit, but if someone were to have the symptoms, can we test them in the school or whether they are positive on COVID?
No, we don't
don't do
test them
that.
in the school.
So there are 15-minute tests you can do if somebody has symptoms that are pretty accurate. But that's what my real question has to do with if somebody is positive and you find out, do we have a plan in place to all of a sudden lock everything down or close everything, or do we just continue as
No,
as
the
usual?
administration has a plan in place, and they have to talk to the Health and Human Services. The first thing they do is talk to Health and Human Services, I believe.
But there's no plan to all of a sudden send everybody home and
I think there's
No.
do drastic measures?
They have to report to the nurse that they're
Yeah,
if
but
they
those
get
are
a
minor.
positive test, so.
Those are minor things. The question is, like we've heard horror stories in other states where some kid comes in and sneezes 3 times and all of a sudden the whole school system locks down for a week. So there's
we're-
nothing like that going
We're
planned
doing
here.
daily symptom monitoring, so the parents and staff are required to report every day if they have symptoms, and if they answer yes, then there's a protocol to follow.
Okay.
If they answer no, then they would come to work or school as usual. And as I understand it, a whole entire shutdown would be based on a lot of factors, and one of them would be the percent positivity of the state and of the school and of the town.
Okay.
So there's a lot of factors, but we're following the DHHS protocol as closely as we can, and it's really a case-by-case situation.
I think it was the Hollis Brookline plan that I read, but I read a couple, but I think the Hollis Brookline plan has different scenarios for every action that happens. The thing's about 30 pages long, and it goes through, if this happens, we're gonna do this, and if this
Yeah,
happens, we're
I've
gonna
read
do this.
those, yeah.
Right, and there have been cases in the district already. There was one in the SAU, there was one in Brookline. I think that one was handled, again, contacting DHHS through, measuring the contact tracing and reaching out to whoever needed to be done. And the correspondence from the superintendent said, deep clean of the building that evening, no need to cancel school, everyone comes back the next day. There was just correspondence that went out today that said, based on that individual situation, I think it's at Hollis Primary, a class was quarantined, building would be clean, school proceeds as normal. So it is a very kind of individual, response. But DHHS is involved with all of the districts, and they help manage the type of response based exactly on what, Kelly said. The percentages in our community, in our,
So the state gets involved to help manage the.
It's not a big
Yes.
panic button.
Yeah, there's no panic button.
No,
Good.
they go through and assess, because they've seen it all at this point, pretty
Right,
much in the
right.
state. So they come first and assess, what the situation is, and then help make the decisions. The school doesn't make
Exactly.
it only on their own. They talk to other.
And it's also,
entities.
the contact tracing is based on, how you're defining close contact. We have kids wearing masks in schools for a significant part of the day. Probably, I don't want to raise a panic level or anything, but probably more at the co-op because the class sizes are a little bit bigger, maybe, than at the elementary school. I don't know individual class by class, but based on, kids that are remote, potentially in the lower grades, those classrooms might have the ability for kids to take off masks. They take all those things into consideration with, how they manage the contact tracing, so.
Thank you.
And we do have, I think we have like all situations. We have we have students that are obviously remote, students that are obviously in school. We have teachers that teach only remote. We have teachers that teach only in school, and we have teachers that teach both.
We got lanes in and out, in and out.
We do,
right?
and so I would say, and I don't even know how it's working in the lower schools, just from my own, anecdotal experience from my own kids, who are at the co-op here and at the high school. My high school student says almost, every class has kids Zooming in, so.
Doing what?
Zooming into the
Oh, yeah,
classroom.
zooming, yeah.
So the teachers are managing kind of both bases of the student population.
But they're not doing that in the elementaries. They
They're-
have remote classes that, and a
With
remote
teachers
teacher.
And a
Yeah.
remote teacher, so
And
remote
then-
is remote and in
Yep.
school is in school.
Yep, exactly.
It's easier to do that when you only have a certain amount of subjects. And,
Sure.
Yeah, so at the high school and the middle school, it's too difficult to try to do that with
Yeah.
the.
But I'm glad the
Kids
technology is
changing
working and the
classes
bandwidth is working, and
Oh, the teachers are with it all.
so.
I'm sorry?
Teachers all happy with this, or?
As far as as happy as they can be in this
Handling it, right,
situation.
right.
And we do have, the teams are playing like modified schedules.
Yes.
So is it that, like our district only plays teams from another district in a
Yeah,
given
there's a
week?
certain amount of districts, if I understand it,
Yeah,
correct me
there's-
if I'm wrong, that are, we play those districts to only those and fewer games, and we don't go outside.
So shorter
of it.
seasons and things like,
Yeah, much shorter season, and trying to do a lot of them on the weekend, so that they don't have buses going and coming, for different things. The JV teams are just practicing, they're not playing. Nobody can go except the parents,
I was
which
just
I'm
gonna
really
ask if we were
suffering,
limiting,
because I
if we
normally
were
go to a lot of the
limiting,
activities, so.
spectators.
Yeah.
So we're letting any parents of our own team, but no parents of the opposing
The
teams.
visiting teams? That's to do in Nashua too. You can't go if you're
Yeah.
a visitor.
Yeah.
So,
They just canceled Nashua too till after Christmas the other day.
At the high school, then at middle school, they're really not doing anything.
no,
like
it's just all
intramural.
intramural, right, within the
We should install the fake sound backgrounds.
Yeah, like the past game.
Okay.
I want to say that I'm impressed by how well things appear to be going. So, thank you very much, and
Right. Everybody's gotta have a
congratulate
team
those
with them.
involved.
Yeah.
Yeah.
Administration and Kelly trying to get supplies, and they've been all working hundreds of hours a week.
Yes,
Greatly appreciated.
thank you.
She's like.
Okay, so, moving on then to the FY, 22 budget planning. I thought I had a file open, which I don't. Give me a minute. So there were a couple of things I wanted to cover that include kind of just dates and timeframes. So reminding everyone that as we move into October, we'll have a full budget overview, and we're a little bit delayed in that process because usually by this point, Andy has come and given us an overview of, curriculum changes, programmatic changes that might be happening in FY22, but obviously, focus has been more on getting kids back to school in this current year, so, as it should be. And what we typically do in October is provide preliminary guidance. Moving in through November, we refine assumptions, go through a few more views until we get to December, and hopefully, I think if I'm recalling correctly, I feel like by December last year, we were pretty honed in on the budget.
Yeah, we're getting really good at this.
Yeah, we are getting good at it. So let me just open, I shared with everyone the budget trend file just to have a brief conversation about the preliminary guidance calculation. If you just give me a second to open the file that I thought I had opened. I always have to dig for this file. I just wanted to walk everybody through kind of how we do this. So it's the first of the file that I sent. There's a preliminary guidance sheet and then an adjusted guidance because sometimes we reevaluate the baseline assumptions and come up with an adjusted guidance view. So by the time, but the format is generally the same. So we start with our current budget. We remove those items that we consider kind of mandatory and non-controllable expenses. So those include things like food service and special revenue that are included in our transfer sections, contingency and trust funds that are predetermined and identified, our debt service, it's not a negotiable item, we know what that level is. We remove special education because it's kind of an entity in and of itself, and sometimes the factors that determine that spending level are outside of, inflationary, kind of an inflationary guideline we would normally assign to things. We remove the SAU allocation and NHRS. And we're left with a guidance base. And then to that guidance base, we apply a multiplier to determine a change to the base, to that, what would happen to that baseline budget. So what we've basically done is in the case of when we were working toward the current budget, it would take, I kind of started working on FY22, it brings our $25 million budget down to like $15.5 million, just by kind of removing all of those items. So we're saying, when we're doing guidance, how is inflation or other economic factors going to affect that $15.5 million as opposed to the $25 million? So what we started doing a couple of years ago was, instead of applying inflation, we had a discussion about removing salary-related costs, because those are addressed specifically, salary-related costs for HEA and HESA members, because those items are specifically addressed by contracts. So,
but the fact that they were Sanbornized, did that make a difference, or in your calculation, that adding them and subtracting them?
It only made a difference. No.
Okay.
Yes, it makes a difference, because it gets, anything that's Sanbornized gets added back in later. But
right.
So yes, but even if we didn't, we would have an estimate, of what the budget, the contract cost would be. In the case of Sanbornization, we know what the contract cost is for the outgoing years.
So I guess what I'm saying is, if you already have a contract in place, you already know that, and that's not going to change.
Right.
But if you're
right.
in a new year where you have to negotiate, you have to estimate that as well.
Yes.
Right.
So what we do is, because we know what that amount is, we can take, or because we know that it's going to be addressed by a contract, we also take that amount out, and we just end up reducing the amount of, we can either reduce the amount of the budget you're applying inflation to, or you can adjust the factor itself. I'm getting to the calculation of the multiplier.
Yeah.
Just give me a second. That's on another page.
I'm getting anxious here.
No, don't get anxious. We did it. We've been doing this for 3 years. I'm just telling you ahead of time.
I want the bottom line.
Now, at the end of last year, we talked about the fund balance
Mhm.
and whether that should be a budget of, part of this calculation.
The
Now,
fund
this year,
balance?
it's gonna be hard because we're gonna have a $900,000.
I'm not sure what you mean by that.
The unreserved fund balance?
Yep.
So historically, I think we have included that in the number to which we apply the fact multiplier.
Right, the percentage of inflation should be added to the actuals, not necessarily to the budgeted.
Right.
No, we've never used actuals as the basis for calculating the budget base going forward. So
Right.
that's part of this larger conversation.
Yes,
Right.
which we had last year, now we're gonna have it again.
Mm-hmm. Well, which we had, actually, we had that conversation after we had gone
Right.
through preliminary and adjusted guidance.
Right.
So it's a conversation that needs to take place now, not after we do guidance. Okay. So if we're looking at, so here we go. So, to that end, does let's have a conversation about whether starting with the budget is the right place, starting with actuals is the right place.
It would seem to me starting with actuals is the right place. Now, this year's gonna be a little bit hard because it's not a normal year. But that aside, I think we should err toward using the actuals. I mean, this year we're gonna have to work with that, but.
Especially given that we're gonna have such a big jump in the NHRS, for example, among other things. And I'm sure there's gonna be some jump regarding the contracts.
The contracts are always addressed kind of outside of guidance because they're a separate warrant article, and it's not, the guidance and the factor that we apply affects the operating budget itself. So that's why those contract levels get added back at the end to get to an overall budget level. But from an operating budget perspective, that multiplier is applied against a base that excludes contract costs.
But we've had that discussion before too, and at one point, years ago, or 3 or 4 years ago, we talked about including the labor in the guidance and let the school board figure out how it was gonna get spent. Now, we may not wanna go there, but we did have that discussion.
And I'm not sure, and I think, and honestly, I don't recall how that flushed itself out, because what we do is apply that factor, come up with guidance, add back relief items if necessary, additional articles, and then we come back to what that overall budget is. So we kind of do both. We evaluate preliminary guidance on the operating budget and
Yeah.
manage
Yeah.
where the whole budget is going to end up,
Yeah.
kind of within the process itself. So Kelly, is there a way, looking at FY20 actuals, I feel like given the way the year ended last year, the level of unreserved fund balance is artificially
Right,
high.
right.
So is there a way, we obviously will have FY20 actuals. Is there a way to add, like an adjustment to actuals that say kind of this is where we would have anticipated coming if we hadn't renegotiated the transportation contract? We would have essentially incurred those costs, because that gives us
Yeah.
really the more realistic view
Right.
of where we would have finished the year.
I'm sure I can come up with something. I mean, how spot on it is,
No, it's just,
not gonna be able to.
It's not gonna be a big number anyway, by the time you get 2.5% of 300,000 or whatever it is. It's just more of a philosophical thing.
Sure.
And on the philosophical side of it, My concern is that if you start using actuals instead of budgeted, it kind of creates a disincentive there, in that you could look at it from the perspective of, if you have cost savings in a particular year and you go through with that, and then your increase for the next year is based on those actuals, you're kind of, your budget for the next year is going to go down because of those savings, and that kind of creates a disincentive.
I wouldn't call it disincentive. I would say instead of having Andy go through 5 rounds of adjustments, he go through 1,
And I think the budget committee's been fairly understanding when Andy or Kelly says, hey, we're doing this because of this.
Sure. But we're talking philosophically here about, applying the budget versus the actual. And philosophically, that's, that's my concern about going to actuals.
That's fair. That's why the government always spends all the money.
Well, and I would just like to argue against doing that, with all due respect, Lauren, because when we budget, we don't just say, okay, here was the budget from last year, let's add 2% or 3% or whatever, and now it's our new budget. We look at every line and say, okay, based on what we know right now, this is what the budget should be. And then when we end up having savings, it's for situations that that were unusual, like maybe this teacher unexpectedly leaves and we pay them $70,000, and a new teacher comes in and we're only paying them $30,000. That's a pretty significant savings that I could never have budgeted for, and I wouldn't dare budget for, because if I did, then perhaps
But yet, when you do budget with that new, less expensive teacher, you are in essence using that actual to calculate your budget as you move to the next year.
For the next year,
Right.
I would, but that's, okay, and that's one situation,
But I'm saying that, but that's a way that you're you are addressing the fact that you're not budgeting budget to budget. One of the most significant costs we have in the budget is the salaries for our staff.
Right.
And you're continuously using a new census to evaluate what the budget impact is going to be for the next year. And then as we realize a census, you again have those puts and takes.
Right, and perhaps that's not a great example.
No, I think it was a good example, actually, because that is something that you do take and use you basically use an actual.
Well, right,
to move
but
forward.
once you take that actual, then it's not going to spike back up again for that particular person. But for health insurance, it might, because let's take the census that we currently have, we budget for that, and then, let's say we hire 3 new teachers in which they took the family plan and we budgeted for a single. So there's just so many variables that taking the actual really concerns me, because I feel like we'll always be in a situation where we're behind. Because of the way we budget every line item.
Like everything else, there are pros and cons, okay? Using the budget gives you more flexibility to manage all these things. And as long as the district is getting back at the end of the year the surplus, it's fine. I mean, there's no issue with that. I just think it looks better to the people who are not paying attention to all the details if you actually go back and start with the actuals as recorded and budget from there. Okay? And so it's just a matter of, the way it looks.
Could you walk me through your concern again with that?
With just the whole general idea?
Yeah.
Well, because the way we budget is not to take, okay, this line item is $2,000, so we're just going to apply 2% more to it, or 3% or whatever, and now it's our budget. We actually look at what's in that budget, and we understand, okay, this year is going to be different. It's actually going to be less because we aren't going to do that. So that would be the budget. Or this year is going to be different because we really need to buy that. So that line item might go up, right? So for the body of the budget, that's the way we're budgeting, is we're looking at what we expect to happen in that year and not just apply percentages. And then we always have our new items, which, we start with a big very nice wish list, and we pare that down based on your input, which is all very important, and based, it starts with the principal's needs or whoever's needs, and we pare that down to meet the guidance number that you all give us. And from my perspective, that works fabulous. Now, from yours, it may not, because we end up with that fund balance. But look at the percentage of that fund balance for the size of the budget. I think if you go and look at other school districts, our percentage against that budget is really quite remarkable. And others are way higher. They're giving back to their taxpayers much more money because they didn't budget as tight as we budget.
Okay, thank you.
I have a high level of confidence, and it's not because I've maintained the spreadsheet.
Can I say a couple of things? Go ahead. Go ahead.
Yeah, I have a high level of confidence in the process that we have, because I really do feel like, and I think last year was a great example. We went through this process and ended up with an increase of 1.89% year over year on a total budget basis. That included contract, a standardized agreement, a HESA contract, but we have had years where it's been, pushing, 3 or 4%, but we really do, I think it really does help to control the growth of the budget. And as we attempt to explain as we go through this process and work toward tax effort and tax impacts, there are also many other factors that affects the out-of-pocket dollars from members of the community, which are extremely important. But I think what we've managed to do is put the focus through this guidance process on the budget itself and managing from the beginning the level of increases. And in years where the increases have looked more significant, this process has enabled us to work through 3 or 4 rounds of the budget, pare down the wish list, and get us to reasonable budget increases year over year. So I have a lot of confidence in what we do, but obviously open to suggestions and recommendations.
Yeah, 2 points I wanted to make. I have confidence in what we do, no matter how we do it. I have a lot of trust. And I remember one year, and I totally support what you're saying, one year I was curious as to how each line item became the suggested amount. And I remember going to the tool, the database, where the teacher went in, for example, and proposed a number based on a good, strong rationale. And I remember going through a number of line items and having a strong rationale. So I convinced myself that that's how the process works. So I have no issue with that. I'm just suggesting that maybe we might want to try, and I don't think starting out with the actual cost is a major change to the process we already have in place. That's all.
And on
So-
that too. Oh,
Go
sorry.
ahead. No.
Well, with this year being crazy, like Lauren said, it'd be a tough year to change
Yeah,
or do
it's
anything
gonna be very
different.
difficult this year.
Maybe something we look at next year to look at the actuals, or, doing this year, and I don't know what the actual budget was, opposed to what was budgeted, if there's less, more, or if you're even there yet, and then going to the budget this year, we don't know if they're gonna pull the plug in November and everybody goes home, what will the budget actually be? So, again, I don't know how much, I don't know if there's a way to just kind of put the budget as last year and say, okay, or if the state would allow it and say, okay, let's just carry the same budget and see what happens. This is day-to-day change could happen, and that scares the hell out of me. To spend all this time into a budget and not know what was that budget last year, what was the difference, and then to go into this year's budget and try to go into the actual versus the budget. And again, I think it's a very valid way to do it. But is it this year? I don't know, long run for a short slide this year, in my opinion.
Yeah, kind of like the budget method in the sense that, like you're saying, it gives you a little more control because you can fine tune it and almost do forecasting based upon what you know is coming or going.
Right.
Versus just a fixed thing. But the other thing I tend to like to do, and I've done a lot with like the Brookline budgets, is like to compare the actuals from the previous year versus the budget to just really using the spreadsheets to see what the percentage increases are.
Sure.
And the ones that you see a big increase on, those are the ones that I tend to like to focus on
Yeah.
as to why is there a huge increase on these line items from year to year.
Absolutely.
You know, that's another, you know, control mechanism to
Absolutely.
look at what.
That's very fair.
One last point. As long as we keep getting A pluses on the, you know,
Something's working.
let's not change the
Yeah.
system, right?
It's not broke, let's not fix it.
Well, I think it will be interesting too, because we are looking at lower levels of inflation and, which is the key factor toward that multiplier. So I think what we can do, once I have the budget view, is I can look at applying the guidance formula to the actuals and the budget and see where we end up. And
But it won't be much different.
it might not be.
No.
It might not be. So, let's just, maybe we can
Yeah.
continue to have the discussion, and let's just kind of see where we end up.
Yep.
Okay.
You still want me to come up with that, what that actual would have been if it was a normal year?
If you could, I would say not by 1,000 lines.
Thank you.
Yeah, no, not by 1,000 lines.
Just a ballpark.
Yeah, yeah, if you had like, I think we could identify like utilities, transportation, substitutes.
Yeah.
Those
Big-
were
the big
probably,
5 items.
those three, the three main drivers to the savings, the additional savings.
Mhm.
Those were probably the most significant,
Okay.
and transportation being the one with the most significant impact.
Now, didn't transportation drop 40%?
Because we renegotiated the contract and paid less.
Right, that's,
Yeah,
okay.
yeah.
Just so unknown right now, what's the fuel cost, what's the, you know what I mean? We don't know.
Yeah.
Given the amount of, we're gonna discuss this later, like the buses, how many kids have in them? Because we've seen large buses, we used to see large buses go by a street, now we see little ones, so I don't know.
I think
Half the kids at
we're
home.
probably running the same number of routes with fewer children in the buses.
Exactly.
For safety reasons.
So they're using smaller vehicles too, or?
Not necessarily. They're using what they have available, so.
So I guess what I'm getting at is there still room to reduce the
No,
contract amount, or that's already been negotiated?
no, the contract's been negotiated, we're back to what our regular rate structure would have been under a regular contract cycle.
Yes.
And I'm not sure if they even, I don't know if they added routes, I doubt they added routes, I'm sure it's just.
No, I don't think they did actually. I think it's exactly the same routes as last year.
Yeah.
I mean, they may have tweaked a couple of things here and there, but certainly not major changes.
Right, okay.
And that might change for this year too. I mean, I've never seen a bus full of kids like Ashwell, you know, I know my kid's bus, there's 10 or 12 kids on the bus, and that's what we came at
Well-
one point discussion to have it
Yeah,
take
technically,
buses away.
I mean, when we talked about the sports, if the bus took the students, it would be like 23 students in one bus is all you could get, because you have to have the
Right.
distancing.
Oh.
So, you know, they're trying to minimize, so the buses will have less people in them right now, plus you've
Well,
got
so I'm saying-
20% of the students not going,
Right.
so.
Hopefully that negates what never needs to be on the bus.
And I think a lot more parents are driving, they don't want their kids
Absolutely.
on the bus, there's a
Right.
lot of issues as to why the buses wouldn't be full right now.
Okay, two of the things that are gonna, the one thing that is gonna most significantly affect, one of our most significant budget assumptions for the FY '22 budget is the change to employer contribution rates that are set in 2-year cycles. I sent everybody the link to the NHRS website that has the rates for the next 2 years. And I think I sent everybody today the link to the historical rates so that you could see year over year how things have gone with NHRS over the last, 20 years or so. And so, sorry, I should have separated these earlier. 1, 2, 3, 4. 1, 2, 3, 4. And so, what you will see is an increase as you go down the handout I just passed out to the third table, the Group 1 employees and teachers represent our support staff and our teaching staff. And the rates will go for our support staff. There's a 25.9% increase from 11.17% to 14.06. And for our teaching staff, an 18% increase from 17.8 to 21.02. So that is what we like to refer to as an unfunded mandate and something we have to incorporate. What we're also going to be looking at this year are contracts, a new contract for the support staff. It's for staff, right?
Mhm.
And professional staff. But how many did I give you? Did I give you 3 or 4?
I think 2.
2. Oh, wait, here's one more. And what I
Thank you.
emailed to everyone earlier today were a set of slides that Tom Solon had put together that talked about the last contract and highlighted some of the key items. And then I took the Budget Committee recommendation package from the last contract cycle, and I just made some updates to it so we can, because Kelly, brought to my attention that we had provided some input the last time. So I'm not sure how many of you had an opportunity to review that, and that's why I brought the copies this evening.
I reviewed it, but I'm going to spend a lot of time on it.
So the prevailing conditions that we have, I just kind of updated that. One of the things to be considered should be the adjustments to the contribution rates that the district, the district contribution rates from across the single, 2-person and family plan, recognizing the increase in the NHRS rates that would affect whether it's a 2-year contract, it affects the 2 years of a 2-year contract. If it's a 3-year contract, there would be another, more than likely, I hate to say it, increase in FY24 and out. The rates very rarely seem to go down. But it is a significant jump as we're looking into this next contract cycle. Just to state that the Budget Committee supports or considers standardization on a contract-by-contract basis. It isn't implicit in any contract that we review that we're going to automatically support standardization, and we'll evaluate the contract elements to determine our support for that contract. And that we would ask that the contracts be available for our Budget Committee review by the January meeting, which would be January 28th of 2021. Last year, not last year, 3 years ago.
To avoid the fiasco that we found out about it here the day of the meeting, right?
That on the day of the public hearing, we
Right.
found out about what was happening with the contract. I think it, I was literally updating the public hearing presentation as the board was voting on the contract, and we literally walked into the public hearing not knowing what the contract elements were going to be. And I don't think that put anybody in a good position. I don't think the school board was in a good position. And because they were faced with addressing our initial set of questions at the public hearing, and we really just had nothing to go on to make a decision. And we did not support the agreement at the time. So we'd ask, I should have moved that to number 1, because we really do need to have that prior to the public hearing and by the January meeting at the latest. I'll reorder that slide.
So to back up for a minute.
Yep.
As the holdout on the standardization piece last year, or the last contract, is it the consensus of the group that there are situations in which we'll support standardization? Because there isn't for me.
I mean, there might be for individual members. I didn't want to put out there that the Budget Committee would automatically agree or disagree. I think, for me, I look at every contract, and whether I can support it is based on the elements and what's comprised in the contract.
Okay, but so my question is,
Yeah.
if that's the consensus of the committee, that's fine. That's not my consensus. I would not support a standardized contract.
Regardless
So-
of content.
Right. So if that's, if
Oh,
people-
okay, I see where you're going.
So my point is, if people
Yes.
agree that they would not vote for a standardized contract, we should tell people that up
Yes,
front.
yes,
Right.
I see where you're going, yes. Okay, so we can start there.
So I would not vote for a standardized contract. which
I won't
can-
either.
Okay?
All right, since we're going around the room then.
I'm just trying to get it, I mean.
I have a great deal of concern about standardized contracts. We as a committee, and I myself personally, had opposed the last one, which was standardized, but we did support the previous one, which was also standardized, but that was part of a bigger deal for it. It's a case-by-case basis, but in general, standardization gives me a great deal of heartburn.
I have a lot of concerns unless there's really a really good benefit to it. Like the one we had just done in Brookline last year was a 3-year one, and there was a lot of public discussion on that. I mean, there's a lot of pushback. But I think I would be concerned with any type of long-term standardization. It's just, I wouldn't support it. There'd have to be something shorter in duration that has really good benefits, to the district from the financial.
Okay,
Typically, I wouldn't support it either.
okay.
It'd have to be pretty sweet, but not a good idea.
I'm kind of like what you said, it depends on what's in the contract. But from another side of it, I look at it as, it's a 3-year contract that we negotiate. If you don't put the standardization on it, then it can be voted down. But we've gone in good faith and did a contract. And when you go to buy a house, you don't offer them an amount of money, and then a year later say, oh, I'm not gonna do that. So to me, it's just, I mean, the word really gets people in New England upset, but to me, you're just upholding a contract. I mean, that's what it is.
But I cannot remember any time in many years that we've ever voted down
Well,
a contract that had been agreed to.
that's true, but
It is
it can happen.
possible.
So, yeah, it
Well,
can
the
happen. And
history
then when
doesn't
it does
support that.
happen, what happens to the contract that you negotiated for a 3-year deal? I mean, if you wanna do 1-year deals every time, then no, I don't see a standardization. But, I mean, there are times when I think that you have to look at, it's a good faith deal. I mean, if you're going into a contract and everybody says, both sides are saying that we agree on this for 3 years, I don't justify, in my mind, voting on it at a March meeting every year.
Yeah, but there's a difference between a 3-year contract and a series of 1-year contracts that are also negotiated. That's really the difference here. And both of them are done in good faith, but with the understanding that if you have a series of 1-year contracts, they can be voted down. That's part of the negotiation process for it. And the distinction between the two of them is a very valuable negotiation tool, which isn't always appreciated, I think. But yes, it is, there is a difference between negotiating a 3-year contract versus negotiating in advance a series of 1-year contracts.
Right, but I do think that a 1-year contract on a typical, I mean, if you wanted to go into a 1-year contract and negotiate it every year.
You don't have to,
That
you
would be
can
very
pre-negotiate
difficult.
them for
Yeah,
multiple years.
We're not saying that.
We're saying negotiate them 3 years at a time, but you can negotiate a series of 1-year contracts that just require voter approval. The distinction in my mind being that you're really taking power away from future voters. We have future legislative bodies out there that when you negotiate a 3-year contract, you're taking that power away from them. And in my mind, that's a significant, it's a significant consideration for it. It's not the only consideration, but it's a very significant in consideration. You're basically taking power away from future voters. And there are times when that's justified, but it should not be done lightly.
I think there's unknowns too, where, something could change drastically, which, for something that looked favorably year 1, by the time you get to year 3, it could, budget-wise or something, just be very, not workable. So that's the concerns, with the longer-term type non-Sanbornizations.
Well, and I just have to say, because I was, I negotiated it last time with once we get into negotiations, we can't discuss it with you guys. And, that contract was started in October and it went nowhere for 2 months. So, it wasn't the board's intent, I don't think it was the union's intent, but when you're trying to get 8 people to the table on a consistent basis, and you've got a lawyer who also does 5 other districts or 6 other districts, and you've got a union representative from the state, it makes it pretty difficult to find a time that everybody can continue to meet on and on and on. So, it wasn't intended to go to the last minute. Believe me, we didn't enjoy it. I started in October. I put a lot of time in this contract.
And I think that's why you could understand our position.
Right.
And the responsibility, we felt that we had.
Right, and I
time,
agreed with
so.
it. From a budget standpoint, I would say no, but I was on the contract, so it's kind of hard for me to vote against it. But, I totally understand, from a budget side of it, you should have the numbers and look at them, but it was not intended. And for you to really honestly think that we're gonna have it negotiated by January 15th and can give it to you the 28th, that's a long shot for a lot of.
I have to say, Cindy, that was the first time that we've ever been handed a contract at a public hearing. So for all the factors that you identified for HESA and HEA, and I can even say in my experience in watching HSD as well, we've never gotten to that point. So all those factors have managed to come together to where the end of January is a reasonable time frame to look to and get information to the budget committees. Now, we've heard in the past, oh, we couldn't give it to you because it was only a tentative agreement. Well, no, actually, I have plenty of red line tentative agreement contracts in my hard drive of things that were going to be voted on that were agreed to and weren't going to change. So there are lots of, that was the first time that's ever happened.
Well, that was the first time in a long time, I think, they went to mediation, and that's a whole nother thing. You have to get those people scheduled, so there's a lot of dead time, unfortunately.
Right, and if it's clear to everyone up front, and you realize, if working toward budget committee support isn't a priority of the union, then bring it to us at the public hearing. I'm not saying, it does not help a case to bring a new contract to a fiduciary, to a body that has a fiduciary responsibility to 2 communities and expect that we're going to just jump on board to $1 million contract. It was also the largest contract that was ever brought to the district. So that's why we lay this out now. It's September. It's not, that specific piece for January isn't anything different than I've said for the 10 that we've done on the 10 or however many years I've been on this committee. So I think it's doable. It's been doable in the past, and it's the same precedent set by the Hollis Budget Committee as well, and I don't know if the Brookline Finance Committee sets a standard where they want to review the contracts at all. So I don't see it as out of line.
No, I'm just saying that I don't know that it's gonna happen, because I'm on that negotiation team again. We haven't had 1 meeting, so I just am saying, there's a possibility. I'm just laying it out, I'm being honest. I'm just being honest.
Yeah.
As Darlene says, maybe it makes no sense, maybe it makes no difference to the union, but maybe the budget committee say, if we don't see the final by the 28th of January, we're gonna vote it down. We will not support it.
And I have no problem pushing at the union. We just haven't started any negotiations, so it's really hard for me to see the end of it when we haven't even started it.
When do you typically start?
In October, usually in October.
Okay, all right.
But
So it's
things
not-
are, again, we're in a
Crazy.
pandemic and a lot of stuff's going on.
What?
So, yeah.
Okay. So I'm sensing, though, a general consensus on non-Sanbornization, so I'll incorporate that. And I can leave that the contract should be available for review, or I can put something more specific that says, flat out, we're not supporting a contract that
I would
isn't
make a
received by
motion
that
that the
date.
budget committee not support a professional contract that we see after January 3rd, 28th.
When's the January meeting?
January 28th.
And the February meeting?
What?
February meeting?
We don't have a February meeting because the first week of February is the public hearing.
Okay.
So we would have a meeting on the 28th, and then the public hearing is the next,
Yeah, that's her
is going to
point,
be the next
to have
week.
it in time to put a public hearing together, yeah.
Okay, so there's a motion on the floor,
I second.
seconded by Raul. Okay, any further discussion?
I'll say, I agree with the sentiment of it, but I'd rather leave ourselves the flexibility of deciding on a case-by-case basis. But it would be, it's a tough.
Last year till the public hearing, but.
I agree 100% on that. So, it would be a tough hill to overcome to say, we're giving you a contract at the very last minute, can you support this? That would be a very tough thing to overrun. But I don't know that I would necessarily want to make the strong commitment to that.
Anyone else have any input?
I don't totally disagree with it. I mean, from the school board position, I'm gonna vote no, but I don't disagree with the thought of it. But since we haven't had one meeting, I just don't know that I could support that.
Okay.
What's the, I guess, date that you have to have it done by in order to be rolled in for everything?
It's a date based on formula, and I haven't done the
In order to
calendar
actually get
yet.
it on the warrant article and all that.
Yeah, we haven't
I
gone
haven't
through
done
meeting
I haven't done
agenda,
the calendar yet.
meeting, because you have to count backwards and all,
Yes.
you know. I mean,
So you count backwards from the date of the public hearing or the annual meeting?
That's
or?
a good question.
isn't it the annual meeting date?
I think you use the annual meeting date,
That's what I'm thinking.
but don't quote me
So
on that.
is it
Just wondering.
possible that it could, a statutory requirement could fall after the date of our public hearing? Is that
No,
like
I don't think that's
possible?
possible. I don't think that's
Okay.
No, I don't
possible.
think so either.
Okay,
I just don't remember the formula.
I think discussing annual meeting, even though there's all this other stuff going on, I think that's on our agenda next, or I think it was part of our agenda building.
I mean,
That we have to
I-
have some kind of,
another
throw in
thing
about
we
when the
typically have for
dates are.
September is the calendar,
Yep.
but, and that's not a criticism, Kelly, it's just,
I know.
I don't think anyone could think much past tomorrow.
Yes.
But I know that the first week of February is,
Yes.
That's usually.
by statute, because it counts off of January
Right.
and the Mondays and Tuesdays in January and things like that. So those public hearings always end up being, and deliberative sessions always end up in that first week
They
of
sure
February.
do.
With snow days and all that
three
good
of
stuff.
them.
So anyway, okay,
Let me note that if, by that date is when we want that, or, like you said, it's probably gonna tend to no, I mean, it's, again, March, we might not even be having a meeting again, so, and I hate to put this negative.
right, but
we'll waste
You
a lot of
either with
time.
us
It's
or you were
entirely
not with us.
but
Comes down to
we
that.
have to move forward. There are still statutory requirements, and until emergency orders get put in place
No.
that push them,
Right,
following all the timelines enabled us to be able to do what we did in June, to be able to get everything
right.
done, so.
Well,
I
that's
guess
the-
my
Sorry.
last comment on the contract is, I've been involved in negotiating with the teachers' union before, and it's tough keeping the thing moving, and any kind of motivation to keep the process moving would have been a benefit when I was doing it. So,
If you know
No, I
it's a
agree.
deadline,
I
yeah.
agree.
it's just,
I
it's
totally
more,
agree with
it's
you,
more
Mark.
posturing than it is,
Right.
Right.
but anyway. that's
And
my
as a
last-
formal committee, you guys, have that opportunity.
Yeah.
I totally
No, I
don't
know.
disagree with you at
Yeah,
all.
yeah.
I just feel like that because I haven't discussed it with the board or anything, that I just can't vote for it.
Mhm.
But in practice, I totally understand it.
Well, I was hoping to sway a couple of votes here, but.
No, I agree with that. I mean, because I know, for Brookline, because we were SB2, our dates were way earlier, and that really forced that
Yes,
issue with the
because
dates,
you had, because being an SB2 community, yes, that pushes everything back a month.
significantly earlier.
Okay.
We'll set the goal.
All right, any other discussion? Okay, seeing none, all those in favor of the motion to, I didn't get the wording exactly right, to stipulate, maybe Matt did, because he's taking the minutes.
Required.
That would require the HEA contract to be finalized by the January 28th Budget Committee meeting in order to gain budget, to
Support.
gain no, that implies automatic support, and that's not what it means.
Well, you need to say that unless it is provided by then
we
the
have time to
the
review.
budget committee does not support
That the
it.
budget committee won't support an HEA agreement.
Well, now you're saying we
No.
won't
Received.
support.
After the 28th.
Well, no, because what you're trying to say is that that we will just not support it if we get it on the 28th.
Right.
Can't say that.
But what we can't say is,
If you get it on the 28th,
28th,
then
you're
we'll
gonna
support it.
automatically support it.
Right.
Well, I'd say we
That's,
need it.
those are two different things
Well, just that we
also.
need it
Yeah,
by
yeah,
the
yeah.
28th for review of our committee.
No,
To make
Lauren's motion is that it will, if we don't receive it by that date, it's like an automatic
Yeah, automatic no.
vote of
Automatic no.
non-support.
But you don't have all the members here to say that either.
Well, that's what the vote is for.
So we're gonna have to vote, you're in or you're not? You're yes or no, that's it.
You're in.
So,
lot of
can you
pressure on
word
me
that
tonight.
for me, Matt or Lauren?
I'm still trying to, something along the lines of the budget committee needs basically saying we want the contract by our January meeting in order to consider it. Well,
No,
No.
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 No, Lauren,
why?
state your motion. One more time so for our review, to remind us what you said.
so
Maybe-
Could
it's
I
a
offer a
reasonable
suggestion?
contract
We need a-
if it
we
is
need a
not.
No, let's go
rewind.
back to, I like Matt's, because if we don't have it by the 28th, we won't consider it.
Okay? Okay.
Not
Okay.
by the 28th, the budget won't be considered by us.
If we don't have it for
If
our
we don't,
January
that
meeting.
the HEA contract needs to be available for the budget committee by the January 28th meeting in order to be considered.
Darlene, I
Considered for
don't,
approval.
In order to be considered
approval?
for approval.
I don't support that write-up because then that's like voting present.
Like
Yeah.
No,
You're not voting against it in that case. You're
The motion
basically
is
abstaining
unless
from
the
it.
contract is given to us by the 28th.
Okay, Lauren,
We will
wait.
not support it.
Can you just withdraw your original motion, whatever it
It's
was?
withdrawn.
Okay. Raul, can make your motion.
I think what I heard was that is unless the contracts are submitted to us by the 28th, the budget committee will not support it. Either if you vote yes, that means you're not supporting
Okay.
it. If you vote no, that
Okay.
means you're against it, against the proposal.
The demanded date.
And are you saying the HEA and the HESA? You're saying both?
Both.
Okay, so unless the HEA and HESA agreements, the contracts, are submitted to the budget committee by the 1/28/21 meeting, the budget committee will not support either
Either contract.
contract.
Um,
By Raul, seconded by
I'll second that.
Lauren. Sorry for the confusion.
That's what you meant to say originally,
That's
right?
what,
That's what I said.
that's what Lauren said. We
I hate
just missed the write-up.
I hate to add any further discussion to this, but kind of the way that it's worded suggests that if one of them is late, we're going to oppose both of them.
Well, good, that's good.
That's good.
If that's intended,
I've been
that's
sitting in
fine.
that
Intended.
seat, and
Yes,
it's,
yes.
Yes, all right, cool.
I've been sitting at
That's-
that seat, there's
that's
more time
fine.
spent ordering sandwiches than there is having a meeting.
That's fine. I wouldn't, that's what's intended.
Sandwiches?
Yeah.
Is it hot in here or is it my imagination?
I feel like
Your
you're
imagination.
And you know what, having the mask
comfortable
on when it's
Okay.
hot,
It was hot
gets
earlier.
worse.
Okay,
So,
All right.
do we
so is
wanna say-
everyone
well, do we wanna
clear
say
on the motion?
1/28, or do we wanna make it our January meeting, just in case, say, there's a snow day, or we get
January
delayed
Our
by a day or two?
January meeting,
January
January
2021 meeting.
2021, yeah.
January 2021 meeting. Raul has amended his Raul, are you going to amend the motion to make,
You're gonna make
that
it,
unless the HEA HESA contracts are submitted by the January 2021
I
meeting?
don't like that change.
No, you like the.
I wanna make it
specific.
specific to the 28th.
Yes.
You could also
That just
put
means that you have
the
to have a
20
meeting before the 28th, so.
No,
like,
for-
if
on the
there's a-
28th,
yeah.
on the 28th.
On the 28th or earlier.
We could end up
Could you
having
put it
more than
No.
one meeting in
No.
January.
Could you write it up as on the January 20th? unless
That means
no
the
day?
contract has to be in our hands by the 28th or earlier.
No,
Yes.
By the
yes.
28th.
Good point,
Yeah,
okay.
that,
Right.
And if
Yeah.
our meetings change to the 29th, we have it on the 20th.
Yes.
I think that,
Yeah.
yeah.
Okay,
That's
we're back to the
transparent enough.
original motion.
I will send the reindeers to pick it up.
All right. Okay.
So the motion is unless the HEA/HESA contracts are submitted by the January 28, 2021 meeting, the DC Budget Committee will not support the contracts.
Yes.
Or any contract.
Support either contract,
You want to say any or either, or?
either.
Second.
Okay, Raoul and Warren. Okay. Any further discussion? Seeing none, all those in favor of the motion? 4, 5.
So torn.
Opposed? 2. Okay, 5 to 2. Motion passes. Okay. I will incorporate that language into the conditions portion, and what I plan on doing with this is, once it's updated, I'll send a note to Holly, CCing you and Andy. And Cindy, unless you know who the members are on the negotiating team?
Me, Tom, and Liz.
Oh, same team, okay.
Yep.
I'll send it
And
to
then
you.
for the support staff, it's Krista, Holly, and Kate.
Well, I don't envy you that process. It's a-
Okay.
It's
Well,
agonizing.
it's essentially the whole board, okay.
I said, I don't
except
envy you
for
that process.
Oh.
Okay.
It's gonna be interesting just this year because there's
just-
so many different things going, like, you know, just
I-
things flying around everywhere. It's like.
So
gonna be
keeping
interesting.
things, just moving along, because I see that it's 8:10, and I really want to hold this close to 8:30 as possible. For the professional staff recommendations, these are, I believe, relatively consistent with what we put together last year. It just says to, right now, our contribution rates stand at 100% across all plans, and it was to consider, and that was since the FY14 contract, so,
And that was put in place to motivate people to go in a certain direction, right?
yes.
But now that,
And the changes to those contribution rates has never been negotiated into a contract since then, since that move. So we would like to reevaluate those contributions so that they're not 100% across the board. The 100% 85-85 was something we probably discussed as a committee. I'm not sure if you still support those percentages. Okay, Matt?
Is there any concept of a cap in this current contract?
The dollar caps were negotiated out and moved to this in the FY14 contract. So HESA continues to have dollar caps, but the dollar caps were negotiated out of the contract. So I would love to see dollar caps come back in. I think that's less, that's even less likely than moving the percentages, in my opinion, but.
I mean, they're way above industry standard in the private sector, so I don't support that.
Yeah, anything with 100 I wouldn't support.
Okay, so would you
Even
like
85.
to make a recommendation, or would you?
It's hard to come up with a number, just real.
I understand,
on
just,
the spot. It's
do you
just,
want to
know,
make a more blanket statement that the district contributions need to be negotiated down from 100% across the board?
I'd say from 100 and 85.
Darlene, I just want to point out that it's really 100%, 90%, 90%.
Sorry, thank you. So it's 190-90 now, not
Yes.
100% across the board.
Correct.
It's an
Okay.
important clarification to make, thank
is,
you.
thank
And
you.
it's 100%
And so-
on any medical plan, not the
Single.
ADS, SOS, well, single, but
Single.
any of the
Well, they,
available singles.
yeah, yes, they only have 2 plans to choose from, and most everyone is on the SOS plan.
Right, is the other one the more expensive plan that would still be
Yep.
covered?
my concern here is that in all of these things, we should have done our homework, and we should have specific guidelines, thresholds, just like the one we just passed, on all of them, if we have any issues with them. Just basically saying we want to change downward, but not saying anything further that suggests that changing it by 1 penny or by 1/100% meets the criteria. And so this is difficult on the fly to make a recommendation and an adjustment. We understand that this is perhaps the Rolls Royce or the Mercedes Benz of all benefits, but maybe we should acknowledge so to maybe try to get concessions in other areas, okay? I'm just saying, it's not a good process to be coming here at the last minute without having an alternate solution that we can recommend, because leaving it not specific doesn't really convey the point. I'm just saying.
I agree, but,
So, I mean, I don't know what we can do about this. You understand what I'm saying, right?
I understand what you're saying. I'm not sure how much closer we'll be to an exact percentage by October.
Or ever, because we're not part of the negotiating process.
Right, and that's why these are our recommendations.
So maybe we should say, so as far as guidelines, without being specific, we should say something like, we all are in agreement that the number should come down by some percentage. And maybe in the final contract, there should have been some effort to bring it down. And if there is no effort, I would like to see a justification for why we kept it the way they did. I'm just saying, there needs to be some sort of way for us to obtain some insight as to what went on and why, and what, the good faith efforts that were made.
Is it safe to say that we'd like them each reduced by 10% to 90 and 80?
I don't know what typical contributions are by employers on all industries. I don't know, in other towns.
But this is a specific industry, though, which is different from commercial industries.
Right.
For a number of reasons.
Again, I'm not sure how we would gather that information.
And the other thing that comes into play is, the salary and that, I mean, the two play together, so.
Well, so for the purposes here tonight, I think all we're trying to do is offer the school board our opinion.
Mm-hmm.
So for the purposes here tonight, what happens if we say 90 and 80, or 90 and 75, or I'm sorry, 90 and 80? And the school board can either.
The two-person is already at 90, Kelly just said. It's 100, 90, 90.
Yeah, so go to 100 and, I'm sorry, I don't know what I said, but 180, 100% and 80%.
180, 80.
Yeah, and the school board can either throw that recommendation in the trash, or they can use it to negotiate, but at least they have something.
It's a suggestion.
Okay, I mean, that's better than nothing.
Okay. Matt, you look like you have an opinion you'd like to share.
No, I agree with that.
Okay.
But, getting back to the point with, I think part of that has to come into play with what the salary is too, because it's one or,
Sure.
they play together, so it's.
Right.
Right. So the idea of a reimbursement pool was one I think Tom Enright brought up 3 years ago, which was, a way of kind of helping to mitigate the move from the 90% to the 85% that we were recommending at the time, by saying, okay, in the first year, we would move the plans from 100, using the numbers from the last time around, from the 100% 90-90 to 100% 85-85, and in the first year only of the contract, make a pool of up to $900 on a family plan, or up to $1,200, up to $900 on a two-person plan. That's two-person, not family. And $1,200 for the family plan was offered as a way to mitigate that move. So that's why that was offered. And just and getting to your point about a more general concept, or Lauren's point about a general idea, inclusion of the NHRS employer contributions as part of the total compensation. Because now what we're seeing as we move into through this contract cycle is a significant jump of almost 20% that the employer needs to put into the
NHRS total.
For NHRS, a 20% increase, 25% for HESA. So that inherently costs the district more money. And how do you manage and offset that and include that as a portion of the benefits package? So making an offer like, because the district is paying more to your contribution rates, we might only increase the table by 0.5%, something like that, but that the impact of an increasing NHRS rate be considered as part of a compensation package, as opposed to something that's completely separate from it.
So a question on the second bullet, you meant, it says establish here, but are we wanting to eliminate? Is that what you said?
No. This one, that second bullet was to establish a deductible reimbursement pool.
Deductible for whom?
For the people on the two-person or family plans.
Yeah, but now that that's already been in place
No,
for
it's
6 years.
not in place at all. These were the recommendations we made.
That he made for this go-around.
These were the recommendations that we made the last time.
Right.
They did not get put in place at all. There was no change to the contribution rates, there was no deductible reimbursement pool, and there was no inclusion of employer contribution rates in the employee compensation package.
So what you're saying is...
So these are here because we recommended them previously.
Okay, so if we keep them there...
Yes.
Then we need to then do some drastic look into other portions of the contract. I'd rather not have it at all and have it be a negotiating...
Right.
A negotiating criteria for this side of the house to be able to negotiate versus something else. It has to be give and take.
I understand that, but we have a very small window to provide input to one side of the give and take, and then we hear nothing. So so you have to look at this as like, this is our chance, it's our one-shot deal to say, here's what the budget committee would like you to consider.
So what I would...
After that, school board, they're gonna make their puts and takes.
I understand. So they basically, I would suggest, take that off the table, because we don't know what's gonna happen anyhow.
So you're saying you don't wanna make any recommendation to...
No, I don't want to be adding additional benefits as part of the...
As the
We're gonna give you all these things.
Okay.
That's
So
what
you don't, so the only thing you wanna consider is changing the coverage limits to the 180/80.
Yes, and on top of that, recognizing that the NHRS contribution is going by 20%, I want to eliminate other things we're already providing as a benefit, as part of the total package.
Okay, so that's, okay, so what are those specific
And
things?
if the other side were to bring it up that they want that, then that puts us in a situation to negotiate that point.
Okay, but again, we're not negotiating anything.
We're not.
So what are the other things that you would say, that you would want to be negotiating?
All these factors should be negotiables.
Yes.
They shouldn't be initial inputs into a given.
But we aren't the negotiators, so all we can do is give input.
So therefore, let's take that off the table.
Which thing am I taking off the table?
The second bullet.
Okay,
That's what I would recommend.
second bullet. Anyone else?
Yeah, I think we should make that inclusion of the NHRS in top bullet.
Okay,
We cap it all the way across.
okay.
It's huge,
Bold,
yeah.
okay.
And my recollection on these negotiations is that once you have the first meeting and you set out some criteria, you can't change them or add them.
Right.
You gotta, that's what you
understand.
got.
Right.
I understand.
Yeah, okay.
Okay, so I have a general, move the NHRS contribution rates to the top, eliminate any consideration of a reimbursement pool, and suggest a change to the coverage limits to 180/80.
I know we're trying to be done by 8:30, but is that?
No, we don't have to be done by 8:30.
Is that second item a benefit to the district?
No, it was a benefit to the other side.
No, it's a benefit to them.
Okay,
It
all
was,
right,
it
you
was,
drop it then.
okay,
Yeah.
it was intended as a way to,
Incentivize.
incentivize an acceptance of the 185/85.
Okay, we'll drop it then.
Okay.
Thank you.
Oh, it's only an incentive and good for the
Right,
district
right.
if it is enough to get them to agree to the reduction on the coverage, the
Right, I
coverage
remember
limits.
that now, yeah.
The
So-
original purpose was overcome by 6 years, so
Yeah.
why
Yeah.
do we need it now?
Okay. So the next items were salary so I have 2 bullets, I'll switch the order. On the salary, adjust the table for consideration of revised benefit contribution percentages in outer years of a multi-year contract. So that was, again, in a multi-year contract, sometimes we hear things like, in the first year, we're gonna increase the table by 1%, 1.5%, and 2%. So this was a way to say, okay, adjusting the table for revised benefit contribution percentages. I'm not sure, honestly, if that was looking at both NHRS and healthcare as the benefits, because it wasn't specific. So we can have a conversation about that. There's also the retirement calculation language that says you get, X% based on your years of service. You get, Kelly, you calculate like your years of service and you get a certain dollar amount related to that years of service. So there was basically no change to the existing retirement calculation. And managing anyone who's off step through performance-based bonuses without automatic increases. But I believe with the most recent contract, we moved everyone off step back onto the step table. Is that correct?
We did, and we also removed the any performance-based.
Right, any merit pool. That was another bullet in here, was to retain the merit pool, but I took that out because that's gone already. So, so the philosophy, it seems that the philosophy is that everyone is on step and there's no more off-step calculations. So if you were to wanted to give anyone who's on the last step, which is probably a significant portion of our populations, probably in the 50 to 60% of our staff.
They're not moving,
They're not moving. So you might move elements of a table, but they can't move up a step. So the people on the step table benefit because they move up a step, and we typically increment the value of the table as well. Anyone on the last step sits on the last step. So that's why part of the philosophy to incrementing the table is because of anyone sitting on that last step, that they get some type of an increase. I believe, and Matt, you can help me with this one. I thought Brookline was adapting toward the step table calculation methodology that HSD was using, which was...
We started that way, but then we came back.
Okay.
Because I think we ended up back to what we were prior to.
Well, they wanted to adopt the HSD table exactly.
Okay.
But when you add the health insurance and look at them together, the Brookline people are actually better off than the Hollis people.
Because the benefit and stuff is negotiated differently.
Yes.
Interesting. Okay, so what the
So it's not just salary.
So what the HSD table did was there are a lot. The steps, the movement step to step in the step table is not consistent. So what the HSD model did was bring consistency to the movement step by step.
And they also added off-step where they weren't off-step.
So they've been off-step, back on step, and are now off-step again.
They seem to be dancing.
I think it was because, well, I don't remember all of the reasons why, but I think it was because of that. It was to balance and make some equivalency in that step movement, that you had to move them off to be able to.
No, having to move them off was more about not wanting to be forced to do an increase to the
step table
because
so it gave
of that last step, right?
Okay.
But we did, one other thing that they did do is when we did take people off step, it's now a flat rate. It's not tied to a percentage, because during negotiations it was difficult to get those separate, you know what I mean? So
right.
So that was the flat rate is how the Hollis is doing it, but
so
not
anyone off step gets a flat dollar amount increase.
Right.
Yes.
Yes. And Brookline did not adopt any of that. They kept the same methodology that they have always had, and they have off step and on step.
Okay. So one of the things in Tom's slides, I say Tom's, these are the negotiating team slides, Tom was the one who put them together, was I thought he had in here, step table compression, other notables, phased in a bottom-up compression of the
Yes.
salary table.
Yes.
So that was kind of, is that like the starting point for closing some of those gaps or some of those inconsistencies in the table?
There were more inconsistencies in the Hollis table than there were in the co-op one. If I recall, the compression was more to help control the amount between steps.
Yes. Okay. And Tom says phasing it in. Does that mean year over year that compression changed through the contract?
I think it did, didn't it?
I think it did too.
Yeah.
I haven't really looked at the salary table
Yeah, I haven't
in
looked.
a couple of years, so
Yeah,
honestly.
I want to say that they may have ended with a 2.5%, or maybe it was a 2, I might be getting it
between
mixed
the
up with
steps.
Hollis, yeah, but I think they started off with 3 point something, and I think it may have gone in 3 phases, but
Okay.
I can't remember exactly.
I have to pull out everything and start refreshing my
I
memory.
know, and I could be getting it mixed up with Hollis too, I tend to do that.
Because he had the salary table increase of 1.5% year over year. The last steps, which were formerly off-step, increases 2% year over year.
Okay, yeah, maybe they
So it's
did do
2%.
that.
Staff on the last step remain on the last step. Merit bonus removed. The professional development stipend was phased out over the agreement
Yes.
term. Okay, so the professional development stipends were removed.
And that reducing the amount between steps is to help offset the fact that you are kind of forced into the fact that you have to have a table increase every year because of that last.
Right. Okay. So, we might, I don't know if we want to make a blanket statement that says salary table isn't adjusted by, greater than current inflation.
Well, which in the Boston metro area is 0.8% from a year ago.
It is low, so,
So 1%.
okay. So managed table increases, step table increases, not higher than 1%. Retain the retirement calculation language. I know I still support that. I'll take out that first item.
Take this organization bullet out.
Yep, I can take that out.
I have a question.
Yep.
The 2.6%, how was that derived? Okay.
Keep going. So I put together this contract expense trend chart, summary chart. It's basically a 5-year view of total salaries, NHRS, and benefits, and just what percent the HEA contract or the HESA contract was as a percent of total salary and benefits.
The HESA contract be made higher?
It could be, when we get to the HESA page. And so 2.6% is based on the 5-year average. And for HESA, the 0.6% is a 5-year average as well. So it can be higher, it can be lower, we could not include it at all. That was intended as a total cost of the entire package that gets put together.
Right. I mean, it's usually not that significant. The HESA contract. It always passes by 100% vote positive. So I think we should consider rewarding the great job that they do.
Okay,
So by maybe not putting anything out there, if they want to negotiate a higher amount, that's fine with me.
Okay, are we good with the 2.6%? that was the
Support staff.
professional staff.
Professional staff.
That's the last bullet.
No,
Yeah.
no, I thought it was a 1%.
It was a 1% table adjustment, but the total cost of the contract itself,
Including
because there
benefits.
might be benefit changes and things like that, shouldn't it be, and because the 1% table change doesn't mean everybody's just getting a 1% raise, it means some people are getting whatever that step change is plus 1%, and the people on the lowest step are only getting the 1%. So it averages out with any of the other financial elements of the contract to be not more than 2.6% of total salaries and benefits that gets put forward with the budget.
Right, and maybe we can bring the HESA to be the same as the one for the professional staff.
So if you continue, did you,
I'm having trouble as a,
do you have that chart that I put together?
yeah,
Yeah, okay.
right, but the inflation rate during this period was 2 and 3%. Now we've got zero inflation.
Mm-hmm.
So I'm having trouble as an advisory board to the school board saying, hey, gee, let's go ahead and get 2.6 in a 1% environment. I think the contract should be 1%.
The total cost
Total
of the
contract.
entire contract.
Again,
Let them fight it
and I
out.
guess I kind of understand what you're saying, and I support it, but let's make the HESA numbers the same as the
Okay,
professional
well-
staff. Okay, that's all I'm saying.
I'd rather go, I mean, I think that HESA is,
Because by,
Right.
using that philosophy, Hess has been far underrunning.
HESA's been underpaid for years.
Right.
That is-
Right.
So,
And
They
that's,
should get
that's
it.
the point I was bringing up.
right. So I would support 1% as a budget committee position.
Okay,
And the same for both.
No, I'd support 2% for HESA. I think they're underpaid, but that's,
Oh, okay,
I've felt that for 10 years.
Okay.
Yeah, yeah, I would
I
support,
agree.
I would support the 1% for the professional contract and just removing that line altogether from the HESA version.
That's also good, that's, yeah,
Yeah.
that works. That way they're free to,
okay,
Yeah, that's a good idea.
okay.
okay. Good.
Okay, so looking at the HESA contract, they do have dollar caps, and they managed them, I think, by running them up, like, I think they were like $50 a year, which was probably greater than the GMR.
I think some years you win and some years you lose.
Yeah, I think we're ahead, I think our dollar cap, though, is
Yeah.
ahead
I agree with you.
of the rates that were out there. So they maintaining those dollar caps is key. So,
You mean in the HESA contract?
yeah,
Those are the people that can't afford the dollar caps.
it's a dollar cap on what we'll cover.
Right.
Yeah.
So I'm taking HESA's side on this.
Lauren, you're really confusing me tonight. Whew, this is another side of Lauren. Okay, so you would,
I'd get a dollar cap on the teachers and take it off HESA.
I would love to see a dollar cap on the teachers. I just don't, I think that, like I said, I think that has less
Yeah, that's what-
likelihood of moving.
Right. I'm sorry, so what are you asking me?
I'm asking you if, so the dollar caps, as they move, we end up covering then 100%? I have to find this file. I
Probably
had
like
it open
100%
today,
of the
and now I
single,
can't find
single
it.
person.
Historical, hold on a minute.
I think it's pretty much on singles 100%,
Yeah.
yes, but
Were the caps kind of based on the SOS plan again for that one? So if you're on the SOS plan,
Oh, I
you're
have
pretty
it.
much covered?
hold on, I can't even find it.
It ended up being.
Oh, here it is. So it's, so they're just dollar amounts, and without having the,
So prior to the last contract, I don't have this updated for the new contract, they were at 100%, 84%, 65%.
Right, and the contract doesn't list it, it just lists,
Right, it doesn't, so, but
dollars,
I
so,
took the
right.
dollar caps and then equated it into,
Sure.
and then with the, I have an FY19 estimated because I didn't have the 20 and 21 rates.
sure,
And it went from 184.65 to 185.66. So
Right.
that's like the coverage limits with the dollar caps equates to percentages that are around 100%, 85%, 65%
Right.
for HESA. So we could just say to continue to maintain those, or that you want to actually increase the dollar cap so that by either a dollar amount or a percentage, equivalent to the GMR or something like that. So that raising the dollar cap to be equivalent with the GMR would hold everything at like the 100%, 85, 65.
sure.
So as it goes up, we cover that increase, which is what that like $50 is intended to do.
Right.
Because that's like a 4% increase, or, yeah, it's like so the $50 is like and it was 50, it wasn't 100, it was 50.
No, I think it was 15.
Yeah, I only have tons of itchy ed ones. So, if we wanted to go with caps that are more like $75, it's like a 6% increase. That would cover like a 6.5% increase on GMR. So again, that would still keep us in that range of like the 100 to like now you're at like 87%. You're starting to like to move up. So if you're willing to consider a dollar cap movement of $75 instead of 50, or $100 instead of 50. But
Yeah,
that's
you're
how.
asking for a number?
I'm sorry?
You asking me for a number?
Yes. Because typically they go up by 50.
Well, I'm ignorant of the facts, but I mean, it's 75 to pick a number. What
I'm
is that?
sorry?
75 to pick a number.
Mm-hmm. I think 75, I think it covers just, I'm not sure if you heard the latest GMR discussion.
I haven't.
And while it wasn't specific for the district, the whole pool was looking at like over 5%, so
Oh.
not in the 8% range.
Okay.
But again, it could be it could vary district
Sure,
by district.
it can, yeah.
So
So 75 works then.
75
Yeah,
would work.
yeah.
Okay, so we'll say 75 as the cap. So that gives a slightly greater benefit to HESA. It would mean we would cover more of their insurance and start to move. So we want the professional staff to come down on their coverage, but want the support staff to come up a little bit
Right.
in what the district's
Right.
willing to cover.
Right.
Continued inclusion of consideration of the NHRS employer contributions. They have the 26% increase in their rates. And just a general discussion point to adjust the table for consistency in consideration of comparable towns. I know a lot of towns do things differently. They have maybe 2 or 3 different support staff organizations. They don't pool, like they'll have a custodial, a food service, assistants and things like that. We pool everybody together into the step table. So it is sometimes hard to manage that consistency. I know that was just as a continuing kind of issue with the HESA contract. And again, I don't remember the distribution though of off-step. I think it is, I'm not sure, I really don't recall percentage-wise.
It's on the high side of
It is on the high
off-step,
side as well.
yes.
I
I mean, we
feel
have
like
had some changes, but I still think that the majority are off-step.
Okay, so this was a recommendation to use performance-based bonus amounts. That's kind of the increases on the Hollis professional table for off-step weren't performance-based. They were, I think, longevity-based. They were based on, I think they were based on your years of service, the dollar amounts, and
There is that benefit, yes.
Yeah, not in HESA now?
I think they do still have longevity,
Oh, they do?
or I'm getting it mixed up, you know. That happens to me all the time.
how she remembers it.
Okay, maybe they don't.
Okay, but, well, maybe I'll take that out and just make a statement that, consider a total cost closer to one, we can still use 1%, and that would be higher than where they've been coming in.
No, we were gonna drop that line.
Wait, what? Oh, we were gonna drop it and just leave it as an open-ended, do what you need to do.
Right.
Okay. Okay, so just then we're left with the comment to make, to address the table with consistency to other towns.
Yeah.
Okay. Okay, great, thank you.
Can we talk about the person who would be doing the meeting minutes?
Oh, yes, just getting back to my agenda. Make sure we're covered through everything else. Cycle, oh, and athletics. We had started a conversation in August or
I
June?
think we started in like May.
May or
Right
June?
after, right
Might have
after
been a
we had,
while ago.
actually June, right after we had the vote. 'cause
It
that's
was
what-
in June.
That's
Okay.
what threw us into the discussion, was the way
Okay.
the vote fell out.
Thank you. We were talking about athletics, the pay-to-play fees, started a conversation about whether, because it led into that's right, it's all coming back to me now. Because of the vote and the way the votes was, I think it was like a 2/3, 1/3 support for the Athletics Expendable Trust. So we started a conversation about whether we really should continue with an expendable trust. And in August, Kelly brought to us an RSA that will allow us to shift the expendable trust for the athletic trust to a revolving account.
Right.
So we would no longer need to bring it as a warrant article at the meeting. So the money could be deposited and managed separately, held separately, utilized for athletics. We could move the balance that we currently have for the expendable trust, we can move to that, and we don't have to put a warrant article forward.
Right.
That's just.
Who has purview over that? Is that still Budget Committee, or is it completely offline?
I need to find that out.
It probably starts to fall in line
I
with
think
like the
it's-
student activity accounts.
Well, or as
or-
part of the budget, I'm not really entirely sure yet, so I
Okay, so
need
we're gonna
to-
continue to consider that because we
Yes, I
have
need,
balances and we are continuing to receive funds and whatnot. But then the discussion evolved into, do we support higher, lower, or no fees, pay-to-play fees? And the discussion went the route of, for those who weren't here, went the route of, well, we don't charge extra fees for theater or the musical programs, band, so why are we charging extra fees for athletics? The Athletics Expendable Trust is in the $67,000, $65,000 to $67,000 range, and the athletics budget is, for FY '21, is $627,000. So you're right at about a little over 10% of the current athletics budget. So by and large, the athletics expenses are included in the budget. So we had a discussion and we asked members to just go back and continue to think about whether they would continue to support pay-to-play fees, support a recommendation to increase them, remove them, move toward the revolving account and whatnot. And so I just wanted to follow up at Lauren's request to follow up on that conversation.
You're talking all sports, either pay to play is good, gone, or indifferent, not per sport? Only because some sports are a lot more expensive equipment, things
Yes.
that the budget's not gonna have, or will they still provide? When I first came here and worked with the football program, 90% of the helmets were expired, and these kids are still using them.
So there is now one booster club that addresses
All,
all sports. But I would say if we're doing without the pay-to-play fees, the budget would be absorbing that $65,000 worth of expense that, for whatever we utilize it for, whether it's for helmets or uniforms or dues or coaches or transportation or new equipment or equipment we would have liked to have put in the budget, but we didn't put in the budget. I think the first year we had it, we bought wrestling mats. I think volleyball, pole, nets were on a recent one. But anyway, we would see that 10% increase then in the athletics budget per se, because we're not funding it a different way. And so that, if we're going to agree to say, we're not going to support, we don't think pay-to-play fees are necessary anymore because we don't do it for robotics or other things, then we have to, as a budget committee, be willing to recognize that the first year we were to support that, we would see an increase in the athletic budget, and we wouldn't have to.
Of about 10%, you said. I mean, I know this year's different, but she was saying like the JV's not even thinking on practice, they can't play. So the parents are paying money for these kids to practice and not play?
Are we still, okay, that's a great question. Are we still collecting pay-to-play?
That's a good question. I'm not entirely sure about that. I'll have to find out.
I'm saying if we eliminate, not that I want the budget to go up, but if we eliminate across the board, whatever sport or activity the kid chooses, the parents are paying for.
Right.
The budget's gonna have to absorb. But, so if we have something where, like this, and the parents say, like, hey, I paid, I don't know if they did or not, but if they're saying, if I paid, why can't Mike play? It's gonna cost, and I know it's an unusual year, but.
Yeah, and it might not be, and again, it might be one of those things, might not be the year to, bring, and it would be a recommendation of the budget committee, and it's something that the district would need, the board and the superintendent would need to decide.
What is the booster club, which will now would then cover all sports? Are you in that?
I don't have any kids there anymore, so
Right,
no.
so you ran like
Yeah.
forward.
Yeah, I mean, I do stuff with them, but I.
Well, my thought is, what does the booster club feel as though, would it be too much more work for them, more fundraising for them, or if we eliminate totally?
Well, I mean, since this was put in play, it's changed a lot. I mean,
Yeah.
Each team was trying to raise money to help offset things
Yeah.
and, in the beginning, before this was even put into play. But now they have a structure from the booster club and administration, so they
Including
can't
all
go
sports.
knocking on everybody's door asking you to
Right.
buy
Right.
cookie
Getting
dough
involved, right.
15 different times a year.
Wait a
Like,
minute, there's no cookie though?
No, we have definitely changed
it's-
the way things
yeah.
are.
And I
Which is
think the
good.
booster club, they took over the ski swap, and
Yeah.
so they've been making money on that. And this year they didn't do the spring golf, but they are actually doing a fall golf tournament. So I think they have more money to help contribute now for the emergency type thing.
Right.
Right,
It's-
or
it's
like
covering
this,
all
or this,
sports.
or like the
Yes.
state championship sweatshirts that a team gets, or like
Right.
those extra kind of things.
Right, so our budget will cover basically the essential things that you need to play the sport, like obviously a helmet. I think there's socks that are required to run that sport. So our budget is intended to provide for the minimal amount of things, or the essential amount of things that an athlete needs. And then if they want those special T-shirts or something special that's not necessary for that sport to run appropriately, then that's where the booster club comes in.
I just didn't know if the booster club encompassed of all, so I thought it was football, hockey, and whatever.
No, I don't know about hockey, but.
It's supposed to cover all sports.
Because they joined with Dairyfield, so it's not just one.
Right, and there are still a couple of sports that are sort of outside of all of this, and they would be hockey, tennis,
Swimming.
bowling, swimming. I think there's one more.
The crew.
Rowing?
The crew, well,
Crew-
they're
crew-
even more different, I
Yeah,
think.
crew
but-
isn't considered a,
Yeah, they're not,
And they're different in the sense that they have to rent facilities. Like
Yes.
swimming has to go to Nashua, swim, tennis,
Yes.
and tennis is, tries
Right.
to find some place to
but
play.
I think
So
Brian is,
that's what makes them kind of different, not that they
But-
should be supported any differently, I don't
But
think,
are-
it's just that they're
so
off.
how are those costs for those rentals incorporated?
their parent paid 100%, and those athletes do not pay for, well, not 100%. We do have some portion of budget in the budget to pay for some of those things, like hockey, for instance,
Right,
and
Okay, so-
tennis, for instance. But those athletes do not pay the athletic fee because their
Oh.
parents are contributing directly towards that sport. And Brian is actually going to propose this year that we start slowly bringing those back in. And if we keep the athletic fees, they will go back, or not that they ever were, but they will start paying athletic fees if we're going to bring that back into the budget.
Okay.
I propose that we take this whole conversation offline to a future meeting or a sidebar meeting, because I was thinking while you were speaking of, but perhaps other concepts that we could implement, so that at least there is a fair contribution by everyone, or none, not just some and not others. And the original purpose why we have this probably has changed over the years. And so what we have now is something that doesn't really reflect the true intent of what we want to do. So this is kind of complicated. And, you know, you shouldn't have a situation where you have parents paying for a lot and other parents paying nothing. So,
It's either all or nothing.
right. And so eventually, whatever comes out of that discussion should come up with a standard way of what we end up doing.
So
It's his
Kelly,
yes or no thing that he had earlier. Yes or no?
so as part of what Brian's putting together, you said he was like looking at like phasing things in. I mean, so is it gonna be kind of like Rick's technology phase-in plan, and we're gonna see all the phases of it to say within X number of years, the budget would
Well-
incorporate all facility rental, or, you know?
Well, as far as the last conversation I had with him, there's like, let's say, 5 sports that are outside of the athletic fees. I think he's going to take 2 of those, like, let's say, swimming and, I don't know,
Gymnastics or,
yeah, I don't know.
something like that.
and bring those 2 into the budget for FY22. And then maybe 1 or 2 more. So, I mean, I don't think it's going to go longer than 3 or 4 years.
Okay, because I guess I would just ask that we see kind of what that
Sure.
view is, just so we have a sense of how much is the overall impact for
Yeah,
all of
I
those
think
sports,
he's-
because
Yeah.
I honestly never considered, as you were rattling off the list, I was like, well, that's a lot of teams, you know, I
Yeah.
just really
I
never,
think there's only 5, yeah.
5 teams,
There's
okay.
only 5 that are outside of
Yeah.
the- Is there, I mean, like you said, same thing, teams that haven't even heard exist. Is there a point where the school stops and says, okay, this is how many athletics we're gonna have? I mean, we've got tennis, we've got gymnastics, we've got rowing, we've got archery, you know.
You don't have rowing. School doesn't cover anything related to rowing.
But what I'm saying is,
Just
you know,
saying.
in the last 5 years, it has to be 5 or 6 more.
And the only reason for that is because the state does not recognize crew as a,
And it's, right,
yeah,
it's not
as
an
a
NHIA sport.
sport. Because we've talked about that, thinking that, you know, if they ever brought it in, that should be considered, but they just haven't brought it in.
Those
They have
boats are
bass
expensive.
fishing, but they don't have
Yeah, what?
crew, bass fishing.
Stop it.
No, we have,
Yeah, we have
yeah.
Well, that's kind of what I'm wondering, okay, so they allow certain things, they allow bass fishing, so we get a bass fishing team here?
We
Yes,
do.
We
we
have,
do.
we've had one
Oh,
for
we
like,
actually have a bass
we've
fishing?
had
Yes, we
like
do.
for 4 or 5 years.
And who pays for that?
we're meeting like this.
They would be in the
Parents?
athletic
Go
fees.
longer.
They pay, they only have a couple things, but yeah, they pay,
Bass fishing.
yeah.
Bass fishing.
So I would just, like, as I said, Kelly, if Brian can put together
Yes,
that full
yes.
view, that would be really helpful, just so we have an understanding
Okay,
of those, you know, because it's now it's that 10% that we were talking about, but it is more than that, because there are all these other sports that we hadn't been
It
considering.
is,
So,
yes.
but I think we can absolutely support moving forward with the revolving account, understanding the requirements for managing it, thank you, and administering it, and removing it from the warrant list.
Yeah, do we have, do we have to make do a warrant to remove it? That's what.
We would, yes.
You have to do a warrant to remove
To
it.
start.
I think so.
Okay.
Well,
think so.
not so much to remove it, but to go to the revolving. We would
right.
need a warrant article for that.
Okay,
I don't think.
one
you-
time,
Yeah.
Yeah, I think, because the
That's
school
gonna be about 2
board.
hours in the annual
because we'll be
meeting.
transferring, and because we'll be
Right,
If
I
it
would
gets
just-
approved, everything gets moved to that.
right,
Yeah,
it would be a
revolving
public
fund.
hearing.
oh, it's only,
To spend, that's what happens now. The school
Right.
board needs a public hearing to spend in the trust, so I would imagine they would have that public hearing to spend money
Yes.
to fund the new way of doing things.
okay, but a public hearing is just different than actually having to have a warrant article at the annual
No,
meeting.
no, we still need the warrant article
Okay.
to start the revolving. I'm just saying,
Oh,
when it
to
comes,
just,
when
once
it
you
comes
have it
time
and
to
to ban-
dissolve
oh,
the
okay.
expendable trust, I imagine it would just be through the public hearing process.
Yep, yep, okay. All right, so we'll continue to explore that, because I
Yes.
think that's a good way to go.
Yes, we will.
Understand the management of it. Okay, now, highlight of the evening. Matt brought forward the, does anyone have anything else on FY '22?
That's
Just
it.
close all of that out. Okay, so Matt brought forward again the idea of having Dawn McMillan, who does all of the minutes for the other boards, do the minutes for the Budget Committee. And since we're running over time, I'll just let Kelly have some input to this discussion.
I do have input. So seeing that in the email was great, because I keep forgetting to call Dawn or email her or whatever and ask her. And I did call her, or I did email her, and then she called me, and she said she would be happy to take over the minutes.
So this is your last month as minute taker.
Yeah, she'll
Matt.
start
Well, that's
next
if we
month.
approve.
Right, right, I don't think Matt ought to do them.
But you and her need to talk.
Yeah,
That's how
we'll
I
talk.
left it, yeah.
Mhm, okay.
Yeah, that'll be the hard thing will be for her getting the spreadsheet, understanding the conversation, because she goes back and watches
Yep.
everything, so
Mhm.
I would think the budget would be a little bit different.
Yeah,
than just
it
a
will be
board
different,
meeting.
but she's actually kind of excited because it will make what you guys do in the school board make a little more sense, having this side of the world
Yeah.
to go by.
Is that, they're on a different step?
Is that a budgetable item, or?
Well, she's paid per hour, so.
Right, so
Already.
you have no budget for it this year,
Oh,
so,
okay, good.
so we will work that out, but then we'll.
Congratulations, Matt. And thank you for doing it for so long. You've done a great job.
So you're not getting paid anymore?
I'm gonna miss providing.
Oh, she's gonna have a field day with you.
Yeah, we didn't warn you about her, Raoul.
I would say
Okay.
Matt's
She'll
format
fix
is
your
very
updates. All
similar,
you do is
so
send her an
we'll all be
email.
used
She'll fix
to-
them.
I tried to follow her format. but
Yeah,
she had
which
trouble
has been great, so she'll be easy to work with. So thank you very much for following up with her. I'll make sure I get in touch with her. So that was the good news of the evening. Okay, well, thank you everyone for the extra 30 minutes. Lauren?
Okay, it was a great meeting. We got a lot done. The 30 minutes that were late, that was the auditor's fault. He
Oh,
was
there
on-
we go.
He was on for 30 minutes.
There we go. Okay, great. Again, I appreciate, I know we do try pretty firmly to stick to that 2 hours, and I respect everybody's time, but I do appreciate the extra time. I think there were good discussions all around that will obviously be continuing as we go through this process. And with that, at 8:59, I will take a motion to adjourn from Dave, seconded by Raul. All those in favor? It's
Aye.
unanimous. And we'll see you in October.
What date is it?
October 22nd.
October 22nd.
22nd.
It's my mom's birthday.
The October
Yep.
crisis, that's when it happened.
Thanks
The
very
missile
much, everyone.
crisis.